Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, October 15th, 2019. In this video, we're going to cover the stocks that stand out. I have a total of 37 stocks flagged in my watch list. I've combed through, there were a total of 78 or 77 individual stocks plus this chart. This is the sector we're going to look at today. It's the specialty and generic drug manufacturer. So generics, I'm sure you all know what generic drugs are, and specialty drugs, those will be your niche companies, such as there's several cannabis stocks in here, for example. They'll fall into that category of specialty drug makers. So before I get into the charts, and I would like to get through all of them, I have 38 that I flagged. I know that's a lot. 37 individual stocks. If I can get through each one quickly, I'll talk fast, spend no more than 30 seconds plus this intro. It should keep the video around 20 minutes. I'm sure I'll go over that a little bit. Why I do so many, it's for twofold. Number one, first and foremost, trade ideas. 95 to 99% of the trade ideas on the site are unofficial. When I find a sector that I like, I'll go through that sector. If it's bearish, I'll find the most bearish charts within the sector. If it's bullish, like this one, I'll find the most bullish looking charts. I'll share my thoughts, whether they are actionable trades, like the shippers last week were actionable. They'd already broken out, they're already running. A lot of in this case, a lot of these are trade setups. Some of these are actually actionable trades now as well, and I'll try to differentiate the two. Actionable means it's already in it's broken out already, or it's in an uptrend, or it's pulled back to support during an uptrend where it's objective long. Others have buy points, so those are trade setups pending a breakout. So you can see here the sector has a little bit of work to do. Before I get into all the individual charts, remember we're just over a year away from the next presidential election. Fewer sectors are impacted as much as the drug and pharmaceutical sector. In these, you're not going to have your big pharmas. You're not going to have Merck, Pfizer, Johnson & Johnson. Those are all part of XLV. Those are in the healthcare sector, but they're the major drug manufacturers. So you're going to have your smaller ones here, and again, the generics and specialty. So what needs to happen for the sector? This is, again, just a compilation of the sector, and there's quite a few diverse business models here. Keep that in mind too. Generics, as far as any legislation, anything coming out of Washington, have very little, if anything, to do with the other specialty makers like the cannabis stocks. So keep that in mind, that this chart is, unfortunately, I don't have one with just the generic drugs. I don't believe there is one. If there is, I'll check that out. So here's what we're looking at, this downtrend line right here, and we're kind of working our way, wedging up here. We have an uptrend line too. I'm laying out a bullish scenario for this sector, but a downside break, especially under these lows back here, that would be bearish, longer term bearish. So the sector has some work to do overall. And then you can see if we do break out above that downtrend line, my first resistance level. Of course, you have a previous reaction high here to contend with, but you have pretty decent resistance up here. What does that mean? Well, let's say we do go to break on from here. That's about a 9% rally up to that first resistance level. I should add another line there. And again, I'm doing this to give you the overview of the sector and next target up there. So again, I do this twofold. Number one, first and foremost, for trade ideas. These are individual trade ideas. I like to, when I come across a sector, and I'm not aware of an ETF that focuses only on the generics. XLV, of course, is a healthcare sector ETF, but you're not going to have a lot of these companies in there. You're going to have big pharma, which may be impacted differently. In fact, what's good for the generics usually is not good for big pharma. Merck, Pfizer, they want to sell their drugs on patent. The generics are, once those drugs come off patent, they're undercutting them and selling the same drugs for a lot cheaper. So that's why I want to make clear that this is not a direct play on XLV. Could be. Sometimes they both rally. All right, with that being said, a little work to be done on the sector here, but we're going to rifle through these charts. And again, I'll go pretty fast. If you have any questions, you want additional information, price targets, my thought on any of these, just post it in the comment section below this post, and I will be glad to get back to you. As I start out here, I'm going to go through these in order of market cap. Keep that in mind as well. I've sorted my watch list of the 37 stocks by market cap. This is the biggest one, $66.6 billion company. As we go down the line, just remember, that the smaller company, the higher the risk and the higher the return potential. So here's ZTS. ZTS, what it looks like, I'm going to show you really two types of plays here. There are people that don't like to catch falling knives. I love it. I love catching trend reversals, tops and bottoms. As you guys know, that's a big part of my analysis and trading. But I also like to play trends as well. This is for somebody that likes to play the current trend. And so on ZTS, as you can see, it's a pretty clean, clear trend line. And the MO is simple. You buy pullbacks to support. This trend line has contained all the pullbacks. It's in an uptrend. What I see down here, we don't have divergence yet. So I've highlighted that. Usually a trend like this, not always, but often it'll come to an end with a negative divergence. As you guys know, that's why I like to short stocks when you have these divergent highs and trend line breaks like this one. It dropped there from the divergent high. It fell 18%, but then the uptrend resumed, and these things can go. So I think the upside's probably somewhat limited, but let's just say have another 10+%. Either way, when you're doing buying a stock that's in an uptrend, and I'm spending a little more time on this just to talk about this type of strategy, it's pretty simple. Your goal is to buy on pullbacks to or very near that trend line, ideally if you can get right on there, with a stop somewhat below. So yes, while this trend will not go on forever, it's objective. If you buy it there and you have a stop somewhat below 3, 4, 5%, and your goal is to then capture the next trend up, which in this case was about a 18-20% rally there, or you just hold it and allow it to go until the trend breaks. So maybe this trend line breaks way up here a year from now or 6 months from now, and there might be another 15-20+% upside. So that's it. So we're not far off the trend line now. Don't know if we'll have another tag. Usually it's early in the trend. When the trend is strong, it's one and done. In the beginning, the trend's forming. Then you have the uptrend line, one and done, one and done. Here we had a near pullback but didn't quite hit it, so we just hit it there. So again, if you get another pullback, that would be an objective entry, but it's not too far off there now. So that's a ZTS. I don't have any price targets because this one's pushing towards an all-time or at least multi-year high. If not all-time high, I'd have to check the longer-term chart. So like I said, you just tuck it away and let it run if you're looking for diversity and exposure, especially long trade ideas. All right, the rest will go a little quicker here. Must not have meant to flag that one. No, I did not mean to. That was flagged previously in my watch list. Let me unflag that one. MYL, Mylan. Nice symmetrical triangle pattern. So look at the trend lines, particularly because I'm focused. Well, this one's work to do. This is a trade setup. Now, two ways to go with this one. You have an uptrend right here, so it's certainly objective. You can buy on this uptrend line. You can have a much more favorable entry than the secondary alternative entry, which is a break above the triangle pattern or the downtrend line. You can see I have my resistance / unofficial targets, meaning that's the actual resistance. Best to sell if you're targeting this move up here, which I think is very likely. I see this one playing out like this if it breaks out. And come up here, hit the 2270-ish level, pull back because you have previous reaction, or not, but then ultimately come up here at least 2616. So from where we're at now, that is a gain of about 37%. So the one option here is to buy pull back here to this right above the trend line now. PPO's poised to make a bullish crossover, hasn't done it yet, but it's ready to. So this one looks good here with a stop again somewhat below. When I say somewhat below, it's up to you. Everyone has different risk tolerance and stop allowance, but I see some pretty decent support there, so maybe a little south of 1759, 1750. Again, if you're targeting there. If you're only looking for a ride up to the trend line, then you might want a little more tighter stop. Your stop should be based on your price target, how much you're looking for. And again, these are some potential longer term targets here. You can see if we break above this trend line all the way up to $35. Again, if the sector's going and the stock is going, that's about 84%. So there's your two objective entries. Or take a partial position here and take a secondary or add to it and take a full position once that trend line breaks. Breaks to the downside, that's going to be bearish. But again, you have support there and then that previous low. So I don't care to short that one. CGC, Canopy Growth. This is a cannabis stock. There's a few on here that stand out. You have these potential downtrend lines. You have a trend line here, and this one's at support. So this one's actionable now. This trend line doesn't have a lot of reactions. I'm more focused on the fact that it undercut that 1982-ish support. You can see the reactions back here, and has snapped back above it. So that's a potential bear trap. Potential but unconfirmed divergent low. So you buy it there with a stop under the recent lows, and I would just hold this one at least for a while. I think these targets aren't super well defined, but about the 24-ish level you can see, and then this downtrend line may come into play here. You may have an alternative downtrend line like this as well. You can add that one there. So the gain potential on the cannabis stocks pretty good size. 20% or so just to come into these downtrend lines. And again, don't get married to these. These can go either way. Any trade, of course. That's CGC. Teva broke out. You had a downtrend line here. You can see on here, you had downtrend line, breakout back test, first leg up. It's pulled back. Some support here around the recent lows. Let's just say actionable. You could buy it here with a stop not too far below the recent lows, because that would also be below where back tested. Don't like to see that if that's the case. I'll say this too, if it does break down and undercuts the lows, I would keep an eye on it. I might go back into it if it stopped out, because it's gonna, if it does make a new low soon, it's going to be an extension of the existing divergences right there. You can see that if it reverses. So that's Teva. Potential targets, this downtrend line, that 965 level, and of course always recent highs are one level to look for. PRGO, Perigo company or corp. This one's in this price channel, but probably the key level to me is this downtrend line right here off the highs back in early 2018, right there. This one can break out. There's really not a lot. Volume of price histogram's pretty thin all the way up here to about that 68 or so level right there. That's an old line. I need to adjust that, and we had must have had something on this trade on this stock before. So let's just say, target about 67, 68 right there. Ultimately, if it can get up above there, it might even take out, or at very least the top of this price channel if it continues to bounce around, works its way up in here. So there you go. That's also another way is a pullback right here to 51.50ish. You can see that is a support level. So you can buy it there. And again, best if it can break above there. PPO looks bullish above the zero line right now. This one's kind of in a sideways trend, but it's working its way up. It's been in an uptrend since late 2018. CTLT, downtrend line break, or you buy it here at the 46.32 support with a stop below. Targets, I didn't list any here, but I'll give you this one right here, that 53.16, and then probably just continue to ride the trend there. It had a divergent high right here, and so you had a correction back to a very good support level. So again, if you buy it at 46.32, by the way, a lot of these guys pay dividends too, not all of them, but so they might be growth and income trades for you as well. Price channel right there. So look for a breakout, or again, pull back to that level with a stop not too far below. RDY, I don't believe that I meant to. Some of these I already had flagged before, so it's going to be less than 37. I'm going to take that one, unflag that one. ACB, Aurora Cannabis, this was one of my favorites from a couple of years ago. It was the first official trade. We started buying this one at 55 cents, and this thing went up to 12.34. That was a couple of years ago when it was ACBFF. It was a bulletin board stock back then. Downtrend line, nice clean downtrend line. Look for a break of that downtrend line. You have a previous reaction low, which was support. It was broken right here. If it recovers that level, that will also be bullish. So break back above the 4-ish level, and this guy can run. This sucker could run quite a bit. I'll give you. These are old levels up top. No, those aren't all my. I'd say 460 an initial target, and that would give you, from where we're at now, given it hasn't broken out, but if you start to see movement in the cannabis stocks, this one will follow. 463, that'd be about a 20% run up to the 460 level, and possibly up here at about 554. Who knows, maybe even more if they get some traction. HZNP, Horizon Therapeutics, this is another one, same thing. You buy on pullbacks to the trend line. You can see the last time we hit the trend line was right here. PPO is curling up. It crossed above the zero line there, and it's turned back up and made a successful back test. The trend is bullish when the PPO is above the 0 line and bearish when below. This one doesn't work as well as some other stocks. Why? Because the trend on this guy has been, this sucker has been big corrections. You got to have some some risk tolerance there, or get back, or you just trade the micro trends. You find the trend lines, you watch a 60-minute chart. I mean, there's money to be made long term. If you've been in this one since the trend started, from the highs recently, this thing was up 134%, but the waves in this one are pretty big. So how to trade it? I think, like I just said, the most objective levels, buy pullbacks to the trend line with a stop somewhat below it, ideally maybe on a daily closing basis, to avoid little whipsaws like this and this that cut right through it. It's up to you how you do that. And I'll tell you, if it can break out soon, it looks to me like it wants to. It's pushing up here. It has a ceiling, some resistance here and here, right here. So a pop above 2811, since we already back tested, could propel this one, break it out to new highs. So that one looks good. Again, as a trend, one that's currently in an uptrend. And then this is the flip side to that. This is a stock in a downtrend, clearly in a downtrend at multi-year lows, but positive divergence right here. Had a minor downtrend line it broke out of recently. It's not really taken off yet, but on that one, if you like the setup, it's a little more speculative. I will say that. Lower probability of success, but higher gain potential. If this one goes, it could run all the way up here. That's about a 25% run up to that 95-ish level there. Again, it's a nice divergent low on that one. Tilray, another, I believe, another cannabis stock. Bullish falling wedge pattern right there. That's it. Can't say much more than that. The buy signal comes on a breakout above the wedge. Targets, I have not updated this chart. I updated the wedge and I flagged it, just scanning through. Again, I went through almost 80 of these stocks today, and flag the ones that look the best to me. But that's it right there. Let's just say first target is right in that area. I call it a target range of about 30, just north of 32 to about 33.70 or so would be, and that would be a nice pop if you get it. That's run about 50% on your money right there if you get that out of Tilray. And again, these are kind of march to their own drumbeat. This is a cannabis stock. So you watch MJ, which is a cannabis ETF. Watch that, and if you don't have a watch list, I can share a watch list. I have quite a few cannabis stocks. You want to see movement in most of them. They're like the shippers that I just highlighted. Birds of a feather flock together. So when the momentum players are in the sector, you will see the vast majority of the stocks all either going up or down around the same time. Lately, the trend for a while has been down. But I'm looking for a short squeeze, bear market rally, whatever you want to call it, and there's about 50% upside in that one. PCRX support. This is a story of buying a stock that pulls back to support right here. You can see gaps there. Sport tag kind of bouncing around. You can trade it in this range up to about that 40-ish level, or if it breaks that, next target would be this downtrend line there. Not one of my favorites, but just throwing it out there. Ironwood Pharmaceuticals, IRWD, big divergent low. It's been building. We had a divergent low right here at this point, and that was good for a rally of about 70%. So I'm trying to just show you how much these guys can move. And so the gain potential is above average. How do I trade it? I take a shotgun approach. I already started buying a few of these today. What I do is say I want to allocate X amount, whatever your number is, to the sector. If you want to put 50,000 or 5,000, whatever you have, into this sector, break it down. So it's 50,000. Say, okay, I'll buy 10 stocks. It's going to be 5,000 each. Although then I'll temper that down a little when I look at a stock. If it's lower priced, low market cap, thinly traded, instead of 5,000, then I might go $2,000-$3,000, and then one that's a large cap, better looking chart I really like, I might go $8,000-$10,000. So that's kind of how I, and again, and then that would just be a part of my portfolio, especially my swing trading long-term IRA accounts that I've decided to allocate to the to this sector, to these groups of stocks here. This one, your breakout comes on or buy signal comes on a breakout, and know your stock. And look at every chart. You can see this one's had a couple false breakouts. But this actually, that was just intraday. This one was a daily close, but we ran right into that 1150 resistance. So what I think will happen, I think the next time it goes, again, if we can get some momentum in the sector, I need to give you one more level on this I just noticed. First target about 975, so breakout there. 975 it would need to clear, so I see one of two things happening. Either pull back to back test the trend line, then break out, or it can punch on through there. And if it does, either way, whether it has a reaction, a back test later or not, my target is that 1150-ish area. That's about 28%. My preferred target now. It could certainly go up here to this next target, about 1387. That would be a longer term trend target, about 50% gain on it. MNTA, Momenta Pharma, a little down. You got to watch these uptrend lines. They break. You have this correction, but so far, this one, what's happened here is I don't think we're going to drop as far as we did last time. Why? Well, right now, or recently, I should say, we put in a nice, powerful divergent low right here. You can see. So with the indicators, PPO making higher lows and prices making a lower low. The big level here is 15. I think if this one pops 15, there's been a lot of failures there. I think you'd see a very powerful, impulsive rally if and when 15 is taken out with conviction. What does that mean? Well, these were two intraday pops, and both times we closed below it. So, if you get a big intraday and it's a lot of volume coming in, we had decent volume. But sooner or later, I think this level pops, especially, again, if you have momentum in the sector, bullish momentum. Otherwise, if the sector's not cooperating, the sector hasn't broken out, most of the stocks aren't moving at the time, the odds for a false breakout are higher. So how do you trade it? Either wait for a solid daily close or impulsive break, or take the breakout. Just don't get married to it. Keep your stops somewhat below. I'm trying to use a box tool there, somewhat below that level. And you can see my target's all the way up there, about almost $20, 1988. Give you about a 30% run on your money if it gets there. SUPN, Supernus, I guess that's how you call it. Supernus Pharmaceuticals, divergent low. This one just continues to diverge. You have divergent low. You have a minor trend line right here that could spark a rally up to this level. This would be, so let's say this would be sort of a semi-aggressive entry, but one that I think works. That would take you about 13% right here, and I think it would play out like this. If you get that buy signal there, big divergent low tells me that this one would likely go up here, have a reaction, so you could book quick profits there if you wanted to get that 13%, buy it back on a pullback, and or buy it back when it breaks above that both the downtrend line and the intersecting 2960 resistance, and you can of course see my price targets there. OPK, Opco Health, had a downtrend line. I'm not crazy about it. There are a few reactions on it. Broke out, not crazy about the price action, but it is a breakout and a back test. And again, if the sector starts to get some upside traction, you can see first targets here about 242. It's a low price stock, and then up here that's right about $3. I don't know why that wasn't turned on. There we go. Not my favorite, but again, just throwing out ideas, and you guys take the ones you like or pass if you don't like them. Kronos Group, I believe this is another cannabis stock if I'm not mistaken. Trend line, don't have divergence, not one of my favorite, so let's just pass on that one for now. Radius, this one was, I've been highlighting this one for a long time. These are the charts back here. Let's see, that was back in, when was that, June of last year. Had May most recently, had it buying back in May. That was this year, yeah, May 3rd. Said it was an objective long entry. See, here's another example of what I was covering in some of these stocks. You have a breakout right here, right? There's the resistance level, and then a pullback to support. So you buy it at 2060, run it up here, go up to 2730-ish, and or the downtrend. Actually, I had it reversing right around the downtrend line. Pull back there, and that was again back then earlier in the year, and I updated it here, said look, in addition to buying it there on that level, you have a downtrend line here. Once it pops that downtrend line, it should run up to that same target I just showed you, and then I followed up. There's a breakout and back test. Again, that was on June 18th. So let's see what happened since then. That was right here. There's your breakout, back test, and from that point, if you bought it on the 2060 level, I'm going to just measure it up, That one ran. You can see it hit my downtrend line right there. About a 30% gain. Even went a little higher there, about 45% from that 2060 level if you bought it there, and pulled back. Right now I'm not as crazy about it. It slides through that trend line a little bit, but it's still in an uptrend. You can see it's working its way up if you just take away all the trend lines and simply look at prices making higher lows and higher highs. So congrats to those of you that are still in that one, took it back then. EGRX, Eagle Pharmaceuticals. I like this one. I took this one earlier today, but right before the video. What I like about it is this downtrend line here and this uptrend line that forms a nice big old symmetrical triangle pattern, and on top of that, right about the 60 level, we had very nice price resistance there, both levels. So I like it when a stock breaks above a trend line or horizontal resistance level. I love it when a stock breaks above two levels. Why? Well, more the better. And some traders might be watching this trend line, others might be watching the horizontal level. Either way, you can see targets right here. So to be clear, that one's actionable now. Better if it pulls back again, any pullbacks to that $60 level, or the trend line here, or the uptrend line. So now you have a confluence of support below it, where before you had a confluence of resistance just above it. So resistance, once taken out, then becomes support. So there's all your other objective levels should it pull back, and of course a stop somewhat below the, at very most below the uptrend line there. ENDP, not the I don't see a hard entry right now, but this one is in an uptrend. Here's one we've traded. I've posted this one on the site quite a bit in the past as trade ideas. Looks like we had a single target hit back then. Oh no, that was one trade. First target hit, second, third. These were the targets on that trade before. But this one broke out right here of this bullish falling wedge. Came back in, but put in a divergent low right there. You can see at this point, actually I should draw that divergence line up a little bit. And so you had a divergent low, and boom, it exploded off that divergent low, and it's been working its way up since. So I don't see a hard buy entry or buy point right there, but maybe below that recent low, put a stop there, ride this one up. Not one of my favorite, but again in an uptrend and probably more upside, especially if the sector continues up. Organogenesis. I'm not sure what they do. I didn't look into this one. I don't know if that's a cannabis related company or not, but looks to me if it can pop that previous high right there. This one looks like it just started trading earlier in the year, so you don't have a lot of charting history. When you see this, I can only scroll to the edge of the chart there. That was an IPO right there, and but it looks like if it breaks 823, traders will probably look at that previous reaction high 1441. That would be a nice pop if it gets it. So you're talking about 86% or so rally there if that one triggers. And there's an uptrend line which you can also either buy pullbacks to or use to set a stop somewhat below that. LXN, Flexion Therapeutics. That was a nice pattern there. I wish I would have saw it at the time. Breakout, back test, and boom, right up to what would have been my first target, 1552, and that is now resistance. So if the stock can break that 1552 level, there's a good chance it can head on up to this next target around 1775, maybe even that 2088-ish level. AKRX, what is that? Acorn Inc. Not crazy about the downtrend line, but it's certainly valid. You can see the downtrend line right here, and you can see a breakout, a back test so far. Not very impulsive buying. Maybe a break over the recent highs right there. Not one of my favorite, but again, you had should have highlighted it here. You can see this thing keeps putting in these series of divergent lows, and that's what stands out here on this chart. So we had 3 divergent lows. You had this one here. You had a nice rally. It might not look like much. I am sure that is well into the double digits. Here, I'll tell you real quick. From that level there, that was about a 40% rally, and then right here you have the rally of about 112% or so. And so this was our third, and really an extension of the existing divergences. Okay, I had to pause the video there for an interruption, but a few more. I think we have about 10 or so more to go. So we'll rifle through these quickly. LCI, this one pulling back to support around 1043. You have an uptrend line here. Not one of my favorite, but I think you can buy it around 1043 or so, give or take, with a stop somewhat below it. Certainly in an uptrend, and again, that's kind of a common theme. Not some of these stocks are in a downtrend, others are in an uptrend. Here's your uptrend right here. The stock is working its way higher. There's your uptrend line right there. The PPO is still above the zero line right now, and again, maybe swing it up here to about that $17 level that holds that 1040 support. COLL, nice clean downtrend line there, ready to pop. So this one is a trade setup. You have the downtrend line here off the highs back in June, it looks like, of 2018. You had a divergent low right here. The stock has been moving higher since, so there's maybe an uptrend line if you want to use that for a stop. And again, you're at resistance, so the trade would be either wait for a pullback down here to that uptrend line, maybe go long there, step in. If it does go to a new low, it'll do so with a divergent low. So if you get stopped out or you want to hold off, you just watch this one. Maybe it comes down here in the next few months or later this year or early next year and puts in another divergent low. Or again, break out of the trend line. You have resistance to contend with up here, but it's pretty good move, about 8 to 13%, so you could swing it up there, and if it can work its way through there, maybe 1883 over time on that one. SLDB, Solid Biosciences, as the name implies, biotech. I'm just going to caution you if you're new to trading or investing, biotechs are like going to Vegas. Take small position sizes or stay away from them if you're risk averse. Why? Because biotechs, they have random gaps. You cannot avoid these. Some stocks, if they're very gappy, like Netflix, you can close it out before they report earnings and sidestep a potential gap that can go against your position. Biotechs, you have no control because they have drugs in clinical stages, various stages of clinical trials, and a lot of times out of the blue, FDA comes out and says we're going to halt trials there, people are getting sick, or hey, it's positive results and the thing gaps up. So in this case, you can see 1, 2, 3 massive gap downs. They would have burned you. So again, if nothing else, if you take that, the takeaway is that when you trade biotech, especially smaller biotechs, as a 60-something% gap down there. This one was probably comparable right there. About 60-70%, so you get my drift there. So trade these at your own risk. However, this one I do think put in nice from technical perspective, charting perspective, in other words, it looks good. Nice divergent low here back in July. The stock has gained 170% since then. The one constant in trading I can tell you that holds true, and there's very little variation to this, is that risk and return go hand in hand. Stocks that have more risk have the higher return potential. So if you want a stock where you can double or triple your money, these guys can do it. You can also get wiped out and lose half your money or more overnight from a gap that you didn't see coming or nor could have seen coming. All right, so that's it. Breakout back test from a technical perspective needs a clear, call it the $12 level to be safe. Punches through there, there's a big old gap to backfill. So you're talking the upside potential on this one, if it's your cup of tea, is about 82%. That's where I'd be targeting if you get a breakout there. DRRX, no, skip that. I just wanted to mention that one, ran into resistance there. It's the only one really I saw that had a more bearish looking chart, but because the momentum seems to be bullish, or at least setting up bullish currently in some of these stocks and setting up in others, I don't care to short that one. OPTN, OptiNote, what you can see here is a nice inverse, a couple things going on. You can see the inverse head and shoulders pattern. That is a bottoming pattern, comes after an extended downtrend. That's when you want to look for it. And you have just a nice symmetrical head and shoulders pattern forming. This is the right shoulder. Two ways to do it. You can take it, in expectations it will go ahead and complete that right shoulder, or you wait the conventional, method of trading a head and shoulders. Wait for a breakout, an impulsive break above the neckline. That's this slightly upward sloping neckline right there. The measure target comes in almost perfectly where my price target is on that one, which is 1564. So although the measure target's a hair higher, I'd be taking profits just below that level. Okay, MNK downtrend line at that 220 support. This is a more aggressive trade here. Don't have a buy signal yet. You need to see a break of the downtrend line. Otherwise, I could see this one going on to continue lower, maybe undercut that recent low and then put in a divergent low like this. So we'll keep an eye on that one. Or, like I said, if you replicate any of these charts, you see trend lines or resistance levels I need to take out, just set a price alert, and that'll tell you if and when that stock broke out. Then you take a look at the chart. HROW, Harrow Health, triangle pattern there. You break of the trend line. This is a measured target. You take the widest part of the pattern, add that to either the bottom or where it breaks out. First resistance target is 704, and then after that you probably just shoot for that measured target, let it run to about 1080, and that would be a pretty decent move from where we're at now. If it hit that level, it's about 110% return. Even if it just hits that 7-ish target, that's about a 33% return. ADMS, Adamas Pharmaceuticals, divergent low right there. You had a divergent low there, and again, these divergences work. They play out. That was about a 90. I don't know. Depends where I put the measuring tool. About 85% rally off this divergent low. Went on to pull back from there, and if PPO look like it's trying to turn up here, we don't have any hard buy signals. I'd prefer to see big bullish engulfing candle on the daily or the weekly chart, or some other type of bullish candlestick reversal pattern. So more of a catch a falling knife trade, but I think maybe a speculative money, and it's also low price, about $4. You could take a shot at with a stop. I wouldn't give it much below the recent lows, and if so, it's a bottoming play, and I'll just probably raise stops and let it run. You can see all these are potential targets on here. NEOS, Neos Therapeutics, this one downtrend line, trigger a buy signal and a breakout. May want to come back in. If it does, might put in a divergent low. So this is a trade setup, pending a, objective entry there. There's your potential divergence if it does that. And LPCN, this one's potentially a potential bull flag continuation pattern here. You can see here's your flagpole. Here's your bull flag continuation pattern, broke out recently, and that's your measured target up there somewhere around that 480-ish level or so, wherever I have that going to. Actually a little bit above that, don't I? Yes, 5 and change, so about a $5 price target on that one. PPO is also curling back up at the zero line right now, so that'd be bullish if we can get some more upside. And of course, to see it take out that previous high, the top of the flag, that would help as well. IGC, simple low price, high risk, pass if that's not your cup of tea. This one has been acting well around this. You can see a lot of gaps around the 84-cent level, so it's a penny stock. You can either buy it at 84 with a stop somewhat below, or wait for a breakout of the trend line. Last time it broke out here, you had a run of about, 190 something percent. So very, very speculative. So again, pass if that's not your type of setup. And then finally, we're almost done. Two more. APHA. We had a breakout right here recently, or today actually, of this downtrend line right there. And I should give you an additional target here. Right about there, those two previous reaction lows, 579, 627, and then let me pull this line down. I haven't updated these levels here in a while. I've had this stock charted for quite a while, so let's just say right now we're looking at about 750, possibly 927 if we get some traction in the sector. CTST, CanTrust, another cannabis stock. There it is, nice impulsive breakout today. The stock's up 28%. You might think, I don't chase stocks that are up 28%, but I can just tell you, when these run, the cannabis stocks, they can continue to run, and a 27% can do that day after day for days. My target, if we can get some traction in the sector, would be bounce all the way back to that 480-ish level. So you're talking from where we're at now about another 267%. There's work to be done. Again, just looking right now for a kind of a bear market rally in the cannabis stocks, but I'm going to give you some additional targets here and here. So you might not want to shoot for that, or just trail them up, set stops just like the shippers. You can set stops and just raise your stops periodically as long as the momentum is in the sector. But again, you have nice bullish divergence here, breakout, and just like you did back here last time we had a similar setup with positive divergence on the daily chart, the stock ran 136%. And that's it, guys. All right, long video, a lot longer than I expected, but that's always the case. Either way, we covered a lot of trade ideas there, so hopefully you guys find this useful. And again, if you have any questions on these or any others in the sector that I didn't cover, go ahead and post that below in the comment section, and I'll try to get back to you on it. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.